Hey everybody, Chuck Barone here. Wednesday, October the 5th, 2022. More crazy in a crazy world we're living in, guys. It's just, every day is an adventure, right? Anyway, as always, I'd like to start out by thanking everybody for their support for the channel, watching the videos. We appreciate all you guys do to make the show a success every day. Thank you guys. The markets today, I guess a pretty normal reaction to a couple of gigantic big move days. I think some data coming out putting a little bit of dampening the exuberance of the market there today. Whipsaw day in the stock market though, because it looked like it was going to be a really big down day, wiping out a lot of the gains from the past couple of days. Then the market rallied, broke even, then it sunk back down, and then it rallied up to finish with small gains across the board. Just kind of I guess if you're a trader and you're in this environment and you're in that market every day trading all over the place, it's a great market. If you're a guy, you know, a working guy with your money in a 401k, this market stinks, bro. Nobody likes seeing this stuff getting up and down and all over the place like this. Hopefully, you know, we look like some of the data coming now is going to pretty much solidify the course we're going to be on. So we'll see how markets react to that. The bond market today down 2. Following stock, actually, I think the bond market's leading stocks down. Down day in the bonds. The 10-year sitting at 3.76%, up 15 basis points, man. These numbers, I mean, bonds are supposed to be boring, right? Bonds are, you know, I hate to say this being an old fart now, but bonds are what your grandfather does. He clips the coupons, and I mean, that's bonds. The bond market isn't supposed to be whipping up 4, down 3.5, all over the place like that. It just isn't supposed to be doing this stuff. So it's just a crazy phenomenon watching it happen. The 2-year today also down, raising the yield to 4.15%. That's up 5 basis points from yesterday. So we had a little bit of a catch up. It was sitting at 49 points or 49 basis points, the inversion between the 2-year up here and the 10-year down here. That narrowing down today to 39. So it's big catch up for the 10-year today. Bond market looking crummy, guys. I mean, if you're a bond investor, it's looking good because you're getting much better yields, especially on this short-term stuff, getting 4% for a 2-year deal. We haven't seen rates like that in a long time. The dollar today had yesterday as bad as it was, today pretty much ate up all those losses, up almost a full point, back up over 111 on the dollar index. You know, the dollar's the champ, guys. It just is what it is. With the data we got today, I think the data we got today reinforces the Fed's path of raising rates. They're going to stay on that path, and that strengthens the dollar. The dollar strengthening, of course, leads to probably, as most of you are learning as you watch this show, a down day in metals today. Now, a strong dollar usually equates to down prices in metals. Gold sitting at $1,718.80 per ounce, down $8.30. Silver $20.76 per ounce, down 38 cents. The dollar dictates what happens with metals. I've been saying it a lot, and I'll keep saying it to make sure everybody gets it. As the dollar strengthens, metals typically weaken. As the dollar, they have an inverse effect, right? So if the dollar's going up, metals down. Same thing, dollar going down, metals going up. Metals actually holding in there, though. This dollar, you know, it's just been really strong. And metals have been holding their own. Seeing silver above 20 bucks is a good sign right now. I think metals are looking for a reason to get going. The only thing holding them back is the dollar, guys. Oil today up on OPEC news. $87.96 per barrel for your West Texas Intermediate, $6.96 for natural gas. We'll get to what OPEC did in the commentary. Bitcoin day today down just tiny, about $15, sitting at 20,162, holding support. These are the kind of days I'd like to see for a little while for Bitcoin. Let's chill the up and down and all around for a while. Let's start build a bottom here. And it was nice to see Bitcoin actually, even though it was only a tiny little gain, to have an up day and a down day for the markets, decoupling. And news you guys need to know, big stuff coming up. The big news, obviously, is Friday's jobs report. ADP coming out today, showing cooling unemployment. They're expecting 215,000 jobs for September, which would be a pretty big come down from 315,000 official last month. Now ADP was off pretty good last month in their estimate, like almost 80,000, I believe, if I'm remembering correctly. So we'll see how close ADP's number is compared to the actual number, which we'll get on Friday. But following this, this report, following the report we got yesterday of the shrinking job market with 1.1 million job openings vanishing, shows the labor market cooling off a little bit. That's the Federal Reserve's big target right now, guys. So that's good news for people who would like to see the Fed take it easy a little bit on rates. A cooling job market gives them a reason to not be as hawkish on high rates. Today, another economic news you guys need to know about. OPEC comes out today. Our friends in OPEC, our buddies, right? They're with the billions and Brazilians of dollars we've supported them with over the years. They're really looking out for us. They're good friends to have, guys. And they announced today, along with their friends Russia and Venezuela and all the rest, a cut of 2 million barrels per day from their quota. That, of course, is the reason oil was up today. I don't think 2 million barrels a day cut is like a dramatic cut. I think it's more sending a message, because the truth is, as I've mentioned a few times, OPEC actually has been producing 2 million barrels a day less than their quota. So so let's say their quota is 40 million barrels or whatever the number is, and they cut it down to 38, right? And they're only producing 38 now. How much of a cut is that really? I think they're just looking to try to pump the price up. As I've been mentioning, it's been in that trough between 80 and 85 with just a couple of little short-term breakouts there. Now, OPEC trying to give the market a reason to go a little bit higher. That's not going to make the federal government real happy. We'll see, Biden's been asking for more production. Maybe the guy wises up and lets us produce a little more here at home, and to fill in the gap there, right? As always, while the Fed has some big news coming, they parade the yo-yos out there. Today it was Fed President Daly, the president of the San Francisco Federal Reserve Bank. I think these Fed people obviously are not used to talking to the size audience they're getting now, because they just say the funniest stuff, man. So here's Fed President Daly, of course, saying that the Fed will stay aggressive with rate hikes. She said that inflation was problematic. I like that word, problematic. And she said that the Fed, this was the amusing one to me, she said the Fed won't just raise rates until something breaks. Something's already broke, Fed President Daly. Have you seen real estate lately? But anyway, she was saying that the Fed is actually very forward-looking. And not only do they get their all the data they get brought to them, but they talk to people in the business community to get their take on things. And she said that the economy and the markets are working well. Well, maybe the economy, some parts of it at least, are working well. But the markets, I don't know, man. The markets really like orderly, and we have not been having too much orderly lately, with the markets gyrating up and down and all around. Hopefully, these Fed yo-yos will kind of just go home and stay home, and we don't really need to hear from them with their commentary every day. Just announce the policy already and let's get on with it. Anyway, to finish things up, Friday, is the big day this week. It's the day we're going to get the unemployment numbers. It's huge for the Fed and the economy. This is going to kind of show the Fed where they need to be moving. I think the two big things they're looking at are that consumer price expenditure, that CEP index, and the employment, how many jobs, what's it doing to wages. They're expecting 275,000 jobs, the official expectation, not ADP's, and that would be down from 315,000 last month in August. If they come in at 275,000, that would be the smallest gain since very early in 2021. Employment, as you guys know, we mentioned on this show, finally surpassed pre-pandemic levels just last week. As we repeated yesterday, job openings falling, so we'll see really how this works out for the Fed. Job openings falling 1.1 million job openings. Right now, the unemployment rate is 3.7%. The Federal Reserve, I think, is targeting, they're saying 4.4% unemployment. They believe that's the sweet spot to dampen this wage increases. So we'll see if they can manipulate it to make all that happen. So far this year, or in the past 12 months, wages are up 5.2%. The Fed would like that number to be about 3% or less, as opposed to the higher 5.2. In other news today, this is the finish. So the trade deficit falls. So it's a 15-month low. We only had a trade deficit of 67 billion. We've been doing well over 100 billion per month. Now, the way this works is kind of kooky because the way they track the trade deficit affects the GDP numbers, right? They assume that a smaller trade deficit means more exports, which changes the GDP. So as I was looking at that and reading about it, I took a peek over at the Atlanta GDP Now tracker, and lo and behold, it was showing that the third quarter was going to be up a little less than 0.5%, 0.3 or 0.4%. Today now, it's showing third quarter GDP up 2.7%. Well, that changes everything, doesn't it? Because I'm kind of like, look at it like this. These numbers you get from the government, you have to take them seriously. They are the official numbers that policy is built on. And we can't just go, see, when the government announces bad numbers, believe that is the gospel truth. And when they give good numbers, it's always just bullshit. It can't be that way. Either it's all bullshit or none of it is. I think they kind of fudge these numbers a little bit. I don't know how real 2.7% growth is for this quarter, but it just kind of, all this is doing is giving the Fed the green light to continue raising rates. They're going to say, look, the policy is working. Employment is slowing down, and hopefully inflation rates will come down. It kind of didn't really work that way. It came down a little with headline, but not so much with core, right? They're going to show that the economy is still growing with the job market and profits, because, some companies are having some difficulty with profits. Some companies are just going crazy. Profits seem to be okay. So I think that the Fed now is going to say, we got the green light for this next increase in November of 3 quarters. Obviously barring some unforeseen who knows what between now and then. But anyway, so just more clouds and smoke and mist and stuff, but we can see through it a little bit to see where this is going. And I think we can pretty much, at least I'd be inclined to say, we can pretty much count on that 3/4 point increase coming up in November. Interesting stuff. Friday is the day, guys. That's the day we're going to get the real employment number, and I'm sure the market will react pretty wildly one way or the other. We'll be here again tomorrow to round out the day. Looking forward to Friday, if that's a big one. We'll talk, we're going to keep you guys posted. As always, if you like what you're hearing, hit like, ask your questions in the comment section, share the video with your friends, your subscribers, people who need to hear this information. And we'll be talking with you guys again tomorrow. Until then, guys, take care.